All right, let's jump right in, shall we? We've got a really cool deep dive to do today.
Absolutely. Looking forward to this one.
So you've been working on a really fascinating trading strategy, one that I think a lot of our listeners are going to find super interesting. It blends technical analysis
Okay.
with options data and market psychology. It's really impressive.
Yeah, that's a potent mix when you bring all those together.
It is.
Yeah.
And you're aiming for, a really solid 70% effectiveness rate, which is ambitious, but definitely achievable.
Right, and that consistency is what we're all after, isn't it?
Exactly. And I love the emphasis that you've put on using leverage very carefully.
Oh, absolutely. Leverage is a powerful tool, but it needs to be respected.
So true. So today we're going to break down your custom indicators. We're going to see how you weigh all the different factors in your strategy.
Yeah.
And we're really going to explore that art of blending the quantitative signals with your understanding of the market.
Sounds good.
I think we're going to have some aha moments here.
I'm sure we will.
What really jumped out at me was this really cool indicator that you've created. You call it value large growth. Right?
Yeah, that's the one. It's all about understanding how value and growth stocks are interacting, not just looking at them separately.
Right. So it's like watching this tug of war between those two investing styles.
Exactly. You're essentially comparing the NQ US LVT index, that's large cap value stocks, against the NQ US LGT, which tracks large cap growth. But then you add this really cool layer on top, and that's what I find so intriguing. You've got these four specific QQQ options contracts.
Interesting. Options contract, they can feel a bit like a secret code sometimes. What kind of message are those contracts adding to your indicator?
Well, think of it this way. Options traders, they're basically placing bets on where they think the market's headed. So by analyzing these specific contracts, and especially their open interest, you're tapping into the collective wisdom or maybe the collective anxiety of the market.
Oh, that's a good way to put it.
You see if traders are favoring call options, which are bets on rising prices, or put options, which are betting on those prices falling.
So it's not just whether the price of QQQ is going up or down, but it's also about how strongly traders feel about that direction.
Precisely. And you've done this very clever thing with color to make this data really jump out.
Yeah.
Green for rising prices, red for falling prices. Super intuitive.
And I love the way you've used those color gradients in those open interest histograms.
Oh yeah, those are key.
It's like a heat map. You can see the intensity of those bets. The darker the green, the more bullish that sentiment. Yeah. And the deeper the red, the more bearish.
Absolutely. It's like a visual representation of market sentiment. It's showing you the strength of conviction behind those price moves. You're not just interested in what the market is doing, but why it's doing it.
Now, something that struck me as a bit unusual at first was that you're using two stochastic oscillators. Is it kind of like getting a second opinions from a doctor?
That's a great way to think about it. The stochastic oscillator is this classic tool for identifying momentum and potential reversals. But you're not just using it to confirm a buy or sell signal, you're using two of them on different time frames to get this multi-dimensional perspective.
So one oscillator is kind of capturing those short-term slings, the hiccups in the market, and then the other one's tracking that longer-term trend,
You got it.
the overall direction that the market's headed in.
It's like having a wide-angle lens and a zoom lens at the same time. So you're seeing both the forest and the trees.
That's such a good way to explain it.
And then you've taken it even further with the scaling and offset settings on that second oscillator.
Yeah, so are you using those to kind of fine-tune the indicator to match like specific price levels or patterns that you've observed in your trading?
Exactly. It's like calibrating a precision instrument, to your own unique trading style. You're not just blindly applying a generic indicator, you're adapting it to reflect your understanding of the market. And that attention to detail is what really sets your approach apart.
All right, so we've got this blend of value versus growth analysis. We've got options sentiment in there, and we've got those momentum indicators. But then there's this mysterious OTD indicator lurking in your notes.
Ah, yes, the OTB, the over the deviation indicator. This one is all about volatility.
Tell me more about it.
Think of it like your personal volatility alarm. It's designed to alert you when the market is getting a little too wild.
Okay, so instead of just looking at price, you're looking at how much that price is swinging around.
Precisely, like a seismograph measuring those market tremors. You've set it up to detect when those tremors reach a certain level, signaling a potential shift in market behavior.
So you're not just focused on making profits, but you're also focused on sustainability, on creating a strategy that can handle different market conditions.
You're building a system that helps you spot those opportunities. But it also warns you when the risks are increasing. It's about staying one step ahead of the game.
Well, this is already giving me a whole new perspective on your trading approach, but I think it's time we shift gears a little bit and talk about how you connect these technical indicators to the broader market narrative, right? Because you're not trading in a vacuum here.
Absolutely not. We'll dive into that next. All right, so picking up where we left off, you've really built this impressive system of indicators. But as we were saying, numbers alone, they don't tell the whole story.
No, they don't.
Well,
It's like, a stock price went up, but you don't know if it was because of like good earnings or because someone famous just tweeted about it.
exactly. You need that context. You need to understand the why behind those numbers.
Yeah.
So how do you actually connect those technical indicators to the bigger picture, to those market narratives that are always kind of unfolding, right?
Well, in my notes, I talk about understanding macroeconomic trends, things like interest rates, inflation, consumer confidence. Those are kind of like the underlying currents that can push the market in one direction or the other.
Right. And it's so cool how you link those macroeconomic trends to your value large growth indicator. Because you're not just looking at whether, value stocks are outperforming growth stocks, you're thinking about WHY that might be happening.
Yeah, exactly. Like if interest rates are going up, well, that could mean investors are kind of shifting away from growth stocks because those can be more sensitive to changes in the cost of borrowing. And that's where my indicator comes in. It helps me see those shifts coming so I can, adjust my strategy.
Yeah. It's like having a barometer that helps you predict those changes in the market weather. You're not just reacting to the storm, you see it coming and you get ready.
Exactly. But it's not all about, economic data either, right? There's geopolitics, like those unexpected global events. They can really throw a wrench in things.
Oh, yeah. And those events, they can totally defy your technical analysis sometimes. They can send the market into a tailspin, even when all your indicators are looking good, flashing green.
Yeah, it's like a rogue wave hitting your ship when the seas seemed calm.
Yeah.
You can't always predict them, but you can be prepared for that volatility.
Absolutely. And that's where your risk management comes in, right? You're not just trying to ride the waves. You're building a ship that can withstand those rogue waves.
For sure. But even when things seem calm, there's the news cycle. Headlines can move markets in ways that can seem totally crazy sometimes.
Oh, especially now, right? It's like everyone's so connected. A tweet, a rumor, a document gets leaked, whatever it is, it can trigger this chain reaction that ripples through the whole market.
Yeah. And that's where I find sentiment analysis so helpful. It's about tracking the mood of the market, figuring out how traders are reacting to those headlines, those rumors.
So it's like taking the market's temperature. Are they feeling bullish, bearish, or somewhere in between? Are people panicking, staying calm, or maybe they're seeing opportunity in all the chaos?
Exactly. And that's where your value large growth indicator and those options contracts you picked, they come in. They're giving you these insights into market sentiment that go beyond just looking at those price movements.
It's like you've got this network of informants. They're whispering in your ear, giving you these little glimpses into what other traders are thinking and feeling.
You also talk about how understanding the why goes deeper than just the overall market, right? It's about individual companies too.
Of course. You got to look beyond those charts and see the fundamentals. How healthy is the company financially? Who are they competing with? What decisions are their leaders making?
It's about understanding their story, their journey. Are they innovating, expanding? Are they struggling? It all feeds into how the market sees their value.
It's like you're a detective, right? Gathering all the clues, building a case, figuring out if this company is a good investment or a bad one.
So it's not just technical analysis, it's fundamental analysis too. And blending those two to get a complete picture.
You're mixing that hard data with those qualitative insights. It creates this more holistic view. But let's go back to your strategy itself, the core of it, your decision-making process. You've got this really interesting weighting system.
Yeah, it helps me sort of prioritize the factors that I think are most important for making trading decisions.
For example, you give a 50% weight to divergences between large cap and small cap stocks. Why is that signal so important to you?
Well, I've noticed that those divergences, they can be like an early warning sign. They can sometimes come before big shifts in the market.
Interesting.
It's like sensing these subtle changes underneath the surface, even if everything seems calm on top.
Oh, I see.
Yeah, it's like if you see cracks in a building's foundation, even though the outside looks totally fine.
Got it. So even if your other indicators are saying buy, if you see this divergence, you might think twice.
Right, exactly. It might mean there's a disconnect in the market sentiment, something that needs a closer look.
It's like that canary in a coal mine. warning you about danger, even when everything else seems okay. Now, in your notes, you're aiming for this 70% effectiveness rate, right? You're using a mix of tools and insights to get there. What makes up that other 30%?
It's not about, just following these rigid rules. There's a real art to trading. You got to blend those quantitative signals with your qualitative insights.
So there's some human judgment involved, intuition.
Definitely. It's about understanding the nuances of the market, reading between the lines, making decisions that just feel right based on all the evidence.
Yeah, that's interesting. That's something we should explore further, right? This art of trading. How do you balance that intuition with your data-driven approach?
Okay, so here we are. The final part of our deep dive into your trading strategy.
It's been quite a journey.
It really has. We've talked about a lot. Those unique indicators you've built, the way you think about those market narratives, sentiment analysis. But what really fascinates me is this idea you mentioned about the art of trading. That blend of, the data, the numbers, and then the intuition.
It's not just about crunching numbers, is it?
It's not. You put so much thought into building the system. It's really data-driven. You've got your indicators, your weighting system. You're super careful with leverage. But you also know, right, that the market, it's complex. It's constantly changing. You can't always predict it with numbers alone.
It's a bit like a living thing, isn't it, the market? It breathes, it reacts, it has its moods.
Exactly. It's like you've built this high-tech car, but you're also learning to be a really skilled driver,
I really like that analogy.
You can sense those road conditions, and you know how to react instinctively when something unexpected happens. So how do you develop that intuition? Is it something you're just born with? Or is it something you can learn?
Well, I think it's a bit of both. Some people, they just have this knack for spotting patterns, They see those connections that other people miss.
Yeah.
But even that natural ability, you have to hone it, refine it. You do that through experience, careful observation, learning from, both your wins and your losses.
It's like any craft, really, isn't it?
Oh, yeah.
Like a musician might have a natural ear for music, but they still got to practice, study, develop their technique.
Exactly. And for trading, that practice, it means immersing yourself in the market.
So it's not just about those charts then?
Not just charts, no. It's reading the commentary, following the news, understanding all those different forces that are moving those prices.
So you're connecting the dots.
Yeah.
Building this mental model of how the market works.
Yeah. And that model, it's not static,
Right.
It changes as you gain more experience. As you encounter new situations, you adapt. Your intuition, it's not a fixed thing. It's always evolving.
Becoming more refined.
Exactly. And that's what lets you adapt to those changing market conditions. You're making decisions that aren't based solely on the data, but on a deeper understanding of those rhythms of the market.
It's like if you're a surfer, right? You'll learn to read the waves. You can study the tides, the wind patterns, all that. But in the end, you have to feel the water. You have to sense the energy of the wave.
It's about those split-second decisions.
Yeah. The ones that make the difference between riding that wave and getting totally wiped out.
Sure.
But even the best surfer can't control the ocean, right?
That's right. There are forces beyond our control.
But they can learn to ride those waves, respect the power of the sea.
And come out of it stronger.
Wiser, too.
Exactly. And that's what's really inspiring about your trading strategy. It's not just about the profits. It's about growth. Continuous learning.
Constantly trying to understand yourself better. And the market, too.
Yeah, it's a journey of self-discovery. You're charting your own course, navigating with skill, intuition, and a good dose of respect for the market.
Well, it's been amazing exploring your trading journey with you today. The way you combine data and intuition, the technical and the fundamental, it's really impressive. And for everyone listening, remember, trading, it's a journey. You're always learning.
Never stop learning.
Embrace the challenge. Develop your intuition and keep searching for that deeper understanding of the market. Happy trading, everyone!